Good afternoon, friends. Another change in the process of filing GSTR 3B and effected from the current 3B which you will file in February 2023 for the period January 2023 itself. Well, in this year there have been two changes in filing GSTR 3B. First change was in July 2022 via Circular 170 of 2022, wherein there was a major change especially in disclosing the input tax credit and reversals thereof in table 4A and 4B of GSTR 3B. You would find our video on our YouTube channel where we have discussed such change with examples threadbare. Now, from the period January 2023, wherein you will be filing the GSTR 3B in February 2023, there is another important change and which you have to give effect to in this 3B itself. On your screen, you can see with an illustration what would be the change, and then we will discuss the implications. So, as of now, in case you have an ITC in your GSTR 2B amounting to rupees 6,000, you take the ITC of 6,000 in table 4A of GSTR 3B, and in case you as a recipient have received a credit note from a supplier worth rupees 1,000, then you disclose it in table 4B and the net 5,000 rupees ITC is eligible to you, which is disclosed automatically in table 4C. Now, you have to take, and it would be auto populated, the net only of rupees 5,000 in table 4A itself. Let us understand by means of an example. Say for example, you have received a bill of a supplier for 100 rupees plus 18 rupees GST. However, you accepted it only for 95 plus 17 rupees GST. So, in your purchase register, you will book a credit of 17 rupees only. However, in GSTR 3B, as per GSTR 2B, you have to take 18 rupees in table 4A and then show a reversal in 4B1 or 2 as rupees 1, and thereafter the net impact of 17 rupees of ITC availment would be reflected in 4C. We feel why this change, wherein you have to take 17 rupees itself ab initio, is a good change, because this is actually your taxable value and the ITC which is available to you. Disclosing 18 and 1 as a reversal was not the correct reflection as per the GST law itself. However, please understand that many a times you get a notice from the department wherein you have to substantiate as to where you have reversed the input tax credit for all the credit notes which are reflected in your GSTR 2B. Then you just reconcile with the value in table 4B1 or 4B2 and give a transaction wise details. However, now you have to reconcile possibly your entire credit which you have availed in table 4A and then show the department as to how you have reversed the input tax credit corresponding to the credit notes, because the credit notes would be netted off somewhere in your table 4A. Mind that this netting off is applicable to 4A3, that is for reverse charge, 4A4 for ISD, as well as for 4A5, that is all other ITC. And as always, there would be certain spillover effects. Let us discuss two situations wherein you would have to keep a reconciliation due to the spillover effect as a result of this change. Say for example, you received a credit note in the month of December 2022 for which you have filed a return in 3B in January 2023, but you have not taken the effect of the credit note in your purchase register. Then the credit note would have auto-populated in your 4B2 and you would have let it remain in 4B2, right? Because the corresponding ITC would have been in 4A, or you would have removed it from 4B2 in case you would not have given cognizance to the ITC reversal due to uncertainty. In that case, in the current period, that is January 2023, for which you would be filing the return in February 2023, you would have to show and take the impact as a net of figure in 4A5 or 4A4. So, you have to keep the reconciliation. On the other hand, say for example, a credit note was not issued by the supplier due to some reason in December 2022, but you have taken the impact of the credit note in 4B1 or 2 in December 2022 period return which you have filed in January 2023. However, the supplier issued the credit note in Jan 2023 which would show as a net of figure this times 3B. So, you have to remove such impact of the credit note because you have already taken the impact in the last 3B, and your 4A5 this time would disclose a higher figure than what is auto populated, and hence again you have to keep the reconciliations for this spillover effect. So friends, due to this spillover effect, you have to file the GSTR 3B and keep the reconciliations in three parts for financial year 22-23. First is the old way of filing 3B from April to June 2022. Therein, after issuance of circular 170, the new way of filing GSTR 3B from July 2022 to January 2023, and now from February 2023 to March 2023 after giving the effect of this amendment in the functionality. So friends, it is very important to understand and inculcate this change in filing your GSTR 3B in February 2023. Please do share, like and subscribe to this channel, and please do share this video for maximum dissemination of knowledge. Stay tuned. Thank you very much.